Good morning, everyone. Let's start with the chart analysis, and that's the euro versus the US dollar. We expect furthermore downside momentum. First, because the market is in a downtrend. Also, because on the weekly chart, the price formed that bearish continuation candlestick. Back to the 4-hour time frame, if we draw a trend line connecting this swing high to that swing high there, we see that the market keeps forming lower lows and lower highs. That means the momentum is down. If we draw Fibonacci from the last swing high to the recent swing low, the price is now around 61.8 and 50% in that key area. So if the price rejects it and move to the downside, the first key level of support will be this one here. And if the price keeps moving further, the next one will be this one right there. But on the flip side, if the price breaks above this trend line and moves even higher, then the last swing high becomes the key level of resistance. A further move to the upside will find this swing high here, the one we used to draw the trend line, as the key level of resistance. So this is the analysis for the euro US dollar. You have your levels here and trade smart. Next one on the list, it's the Great British Pound versus the US dollar. Similar picture, but more strength, let's say, on the sterling because of these long bullish candlesticks. Here I don't draw Fibonacci or trend lines because they are not applicable, but what I can see is that this bearish candlesticks high is around 1.312, and if the price keeps going up, the next level will be this one here. But for now, the price is kind of occupied with this range, with the bottom level to be this equal lows, and the next one, this one down there. We continue with the Australian dollar versus the US dollar. The price is in a downtrend. This long bearish engulfing candlestick still valid. There is an intraday inside resistance right there. That's the place where the price is experiencing a bit of struggle to push further down. But if it continues lower, this becomes your demand zone, with the key level of support being this one here, but also these candles lows are important. So we draw in demand for about 6 pips. A further move to the downside finds this support here as the next key level of support, and respectively, these two levels up there will be your resistance. As the euro, sterling, and Australian dollar push lower versus the US dollar, of course, the USD versus the Japanese yen is in a strong uptrend. If you can see all these green candlesticks, how they show the strength of this market, you understand that we are looking to buy this market rather than selling it. The key levels of support are these two, and the key levels of resistance are up there. If you're doing day trading, intraday trading, or scalping, of course, every 4 hours highs and low will become relevant level of support and resistance. On platinum, the price is struggling to push further down. After we see the price making a lower low from this point, from the break of this low, it didn't follow through and the buyer stepped in. However, we can see the spread is so big and it's not the best market to trade on the 4-hour time frame. But if we consider that this low is lower than that low, that means the market has still bullish implications, but we have to be very careful in case the buyers aggressively step in and pushes the price to the upside. If the price moves up, these are the two key levels to watch. And if the price comes down, here we can see some buying pressure. Gold on the 4-hour time frame has a mixture biases because the market now is trendless. It doesn't trade it to the downside or to the upside. We don't see any clear trend. The key levels of support will be these two in case the price moves further down. The key levels of resistance to watch will be these two up here. These are the swing highs. They can cause the sellers to re-enter and push the market lower. And also these are the key levels that can attract a lot of buying pressure. But unless the price breaks outside of this range, all the moves here on the higher time frames can cause low quality entries. It's been a while since we are discussing about the USOIL, and in previous videos I explained why we're less likely to see a push to the upside, and this pattern can push the price further low instead of up. The reason was because the market spent more time within this rectangle rather than when it went up, and we see that the sellers came strong. All these candles have long real bodies. Currently the market makes lower lows. The price tried to grow aggressively below this trend line. Now if the price breaks to the downside, these are the two key levels of support to keep an eye on. And if the price bounces off this area and moves up, then the key levels of resistance will be this one here. And this is the more important one, around $61, because it's the intersection between this trend line and this horizontal resistance. Cooper, on the other hand, moves a bit sideways. We don't want to get caught into these moves, although the spread is not bad here. If you want to add a key level of resistance, that will be the Friday's high. The rest key levels of support are still valid from last week. Nothing changed. So basically from last week, the price moved from here up to there. So pretty much it went nowhere. And gas on the 4-hour time frame, the market really didn't move anywhere either above or below the previous week's resistance and support respectively. So the market moves sideways. Maybe we will see a distribution phase here. After the market makes higher highs and higher lows, the price stalls at resistance and it will continue with the distribution phase. That means the price will break to the downside for a new downtrend to begin. In this case, if the price moves further down, what you're going to have as your key levels of support will be these two numbers here. And for key level of resistance, you're going to have respectively these areas. If the price breaks above the resistances, then a new uptrend will begin. And if the price breaks below the support, it means the distribution area will form. Bitcoin gave some push to the upside on the weekend, but still in a strong downtrend with all these key levels to be the relevant one. The price now is trying to form this three-candle formation, bearish, bullish, bearish, and that has bearish implications. So basically, because the market is in a downtrend, we do expect further continuation to the downside. If you see these red candles, how long they are compared to these green candlesticks, you will understand that the market has more bearish than bullish implications. Now the price rests at an inside resistance, and this becomes the key levels of resistance here and the key level of support respectively. If the price breaks below this key level of support, the next one will be down there. Solana is in a downtrend. The market has a very strong bearish implications, and we can see from this move to the downside, if the price continues moving lower, the first key level of support will be this one here. If the price breaks and closes below that, we are reaching the $100. The next one will be below $100. But on the flip side, if the price moves upward, this bearish engulfing high becomes the key level of resistance. And last one is the XRP. The market also is driving by a selling pressure. The price now found support around 1.80, but is still in a downtrend. This has bearish implications. If the price breaks below this low, the next key level of support becomes the $1.